Hello and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I'm your host, Blind Run. That's what I go by on the interwebs. However, my real life name is Matthew, so you can refer to me as that if you like. Today, we're going to be talking about a new release from Gminer. We also have Nvidia revealing new workstation GPUs. Basically, we have the Big Daddy A5500 in the A-line series of GPUs. You know, we've tested the A4000 and the A2000 on this channel already, so you can go take a look at those. We basically just have the 3080 Ti version coming out. We also are going to talk about the full details of the H100 Hopper GPU for data center from Nvidia. Now, these are something that we'll probably never get our hands on, but theoretical hash rate with 3 terabytes a second of memory bandwidth is pretty incredible. We're also going to be talking about Discord turning into an info stealing backdoor and how you can go ahead and make sure you are not infected. One way is to join our Rocket Chat and stop using Discord, but you know, I understand that that's not really possible because I still have to go back to Discord for a lot of different things. So stay safe out there, guys. We also are going to have U.S. Senate to consider bill examining El Salvador's Bitcoin experiment, and of course, the president of El Salvador's dissatisfaction with this proposed bill. We're going to be talking then finally about Bitcoin and Ethereum mining and what the data shows on the state of cryptocurrency mining. Following that up, we are going to have, of course, our standard discussion about mining profitability for the day because we cover it every day from the basis of my farm, so you guys get an idea of where I'm at. And then we will be covering, after that, of course, the questions and answers. Now, super chats are never required, always appreciated, easiest to read, so they are the questions that get answered the first, and then tagging @SonOfATech for that Q&A section will let me find the questions easier, so please try to do so. I can't always get to all the questions, it's just the way it is. It's just a matter of sheer volume to time that we can't really combat. Let's get into it right after a word from today's sponsor. Today's sponsor is BT Miners. Purchasing mining equipment online can be dangerous. With all of the fake storefronts and scams, it can be hard to find a reliable source. That's why when BT Miners reached out for a channel sponsorship, I started by verifying that ordering and delivery went smoothly with a purchase of my own. If you are looking to purchase ASICs hardware from Bitcoin to Dogecoin miners, they are available for purchase on bt-miners.com. BT Miners is a trusted source by both ASICMinerValue.com and CryptoMiner.com. Follow the affiliate link in the description and use promo code FREESHIPPING2021 for free shipping on your order. Welcome back, everybody. Be sure to check out the affiliate link for BT Miners down in the description. I know they're a little short on supply due to the shutdown in China or the over everything that's going on there. So I don't know when they're going to get more stock and what the pricing is going to look like, but there are still items in stock, and I believe they're in the New York area of the US. Let's get into Gminer release. This is version 2.90 released yesterday. Improved performance for ETH hash and TON dual mining. They improved the TON performance. And then they added Ethereum Classic plus TON dual mining support, which is probably super wanted right now with the increase in mining profitability on Ethereum Classic. They added the RTX 3060 Ti for support as well. I think it says 2414. I think that's going to be the version. Disable quick edit mode for Windows by default, and improved pool balancing reporting. Supported pools and coins are as follows: 2 miners, Ethereum, Ethereum Classic, Raven, Aeon, Cortex, Beam, Bitcoin Gold, and Flux on Ethermine for Ethereum and Ethereum Classic. Flypool for Raven and Beam, Easel for Ethereum and Ethereum Classic, and Nanopool for Ethereum, Ethereum Classic, and Raven Coin. So that's going to wrap up, of course, the miner releases for today. We don't really have any more. They've kind of slowed down here recently. I have been hearing good things in my Rocket Chat about the new Gminer across Nvidia and AMD GPUs, but I have not tested personally myself. Let's get into the hardware news for the week. We have lots of fun stuff. First of all, starting it off, we have Nvidia revealing a new workstation GPU for desktops and laptops. It's going to be the RTX A5500, which is a 3080 Ti in disguise, as stated by WCCF Tech, or interpreted by them. I'd kind of differ a little bit on this, just primarily due to the memory type, which we will get into. Nvidia is extending the scope of expert graphics cards from RTX A series for the GTC 2022 with the RTX A5500 and several new graphics cards. For workstations, it's put marginally under the premium RTX A6000 in the laptop as RTX A5500 integrated GPU. It is itself the new leading model. Commonly, there is little likeness between the two. The graphics card of the RTX A series, previously called Quadro, are utilized for 3D graphics rendering with ray tracing, video altering, AI computations, and other workflows. They utilize extraordinary drivers and offer additional aid to users. The Nvidia RTX A5500 for workstations with a dual slot cooling architecture involves a similar GA102 setup as the GeForce RTX 3080 Ti engineering samples, and hence offer 5% fewer execution units than the past top model of the RTX A6000 with a full GA102 configuration. With 24 gigabytes of GDDR6, so it doesn't have the 6X, and the reason they do this is because it is memory error correction, or ECC for error correction. The graphics card offers half as much memory as the premium offering. Memory interfacing and clock remain untouched. Two RTX A5500s can be interconnected by means of the company's proprietary NVLink. So you can do NVLink on these, which is interesting because you can't do it on the 3080 Ti. For gamers, this could be an interesting play, depending on pricing too. The grouping makes sense of why Nvidia is sending off marginally more modest adaptation 18 months after the RTX A6000 and toward the finish of Ampere's term, basically with the strained delivery system. It is said Nvidia could convey an adequate number of graphics cards with GA102 full development and 48 gigabytes of GDDR6X memory, and attempts to fulfill a portion of the closely involved SKUs with the option put beneath. The new RTX A5500 graphics cards is also available for mobile workstations as the RTX A5500 laptop GPU, which corresponds to the configurations of the GeForce RTX 3080 Ti. Now we have all of the specifications down here. The big ones, obviously, that we're going to be looking at is going to be the memory bus, or the memory interface here. It's going to be 384 bits. The total bandwidth is 768 gigabytes a second, which is going to be short of the 3080 Ti at 936 gigabytes per second. However, the key difference here is going to be that it won't be a light hash rate. So for miners, what we're looking at is, not what a full 3080 Ti would be on mining performance. However, it would be fully unlocked because it is the A series. Now, with that sort of memory performance, what could we look at? This could be pretty easy to calculate if we pulled open a percent calculator, right? So if we pull the percent calculator up, and then we just go ahead and say, what is 768 of 936? Let's see. Yeah. 936. Calculate that out. It's 82%. And then we already know that essentially we can do 0.05, 82.05%. That the 3080 Ti would essentially be the 115 megahash a second if it was fully unlocked, not dissimilar from the 3090 because the memory bandwidth is about the same. And the result would be around 94 megahash a second on this particular GPU. However, poof, all dreams destroyed when we take a look at the price premium for this data center GPU being $5,566.70 compared to the $1,652 of the 3080 Ti. So obviously it's going to be a little out of reach for miners and gamers alike. Unfortunately, I'm still disappointed that the 3080 and the 3080 Ti's do not support NVLink. However, they're going to be doing that with the A5500. So a little weird, but kind of expected from Nvidia. There's the wrap up on that. We do have more information on the H100 as well. And this one's going to be a beast, boys, because it's going to be really, really hard to determine, but we're going to try to get our best on what the hash rate would be. Let's get into specifications. We have, obviously, yesterday, the Nvidia conference that covered all of this stuff. We have complete data sheets here from Nvidia themselves. This is the Hopper H100. And we could go over all the specifications, but really as miners, what we're concerned about here is going to be the memory. And there is going to be two different interfaces, right? You're going to have the SXM and then the PCIe. In most cases, you're going to be seeing the PCIe, but if you were to be mining on it, you would definitely want to hit the SXM up if you could, because you have an entire terabyte a second more worth of memory bandwidth. And if we're talking about the difference in hash rate here, if we were looking at, for example, the PCIe version here at 2 terabytes a second of memory bandwidth, you would be at pretty easily around 230 mega hash a second, maybe even more. But if we went all the way up to the 3 terabytes a second on Ethereum, you really could be at 345 to 350 mega hash a second on a single GPU, which is quite incredible. Now, of course, the thermal design here, the TDP, is 700 watts if we went with the SXM version, while on the PCIe version, it drops all the way down to 350 watts. So maybe that 2 terabytes a second at 240 mega hash a second at 350 watts would be the most enticing version anyways. The most hash rate obviously being on the SXM, but the most hash rate to power ratio being on the PCIe version. If we did a quick calculation here for, of course, that, we could figure out if it was maintaining 350 watts the entire time, which I assume it would, probably closer to 400 watts, and we took the hash rate, right, we would be at the projected of 230 mega hash a second divided by 350. That would give us 0.65 mega hash per watt. Not bad at all, considering the rest of the lineups. Now, pricing, I don't really have that on here for us right now. I assume it's going to be pretty much unavailable, and it is aimed at selling to data centers, etc. But it doesn't mean we don't have fun taking a look and seeing what the possible outcome would be. There's the H100 options for you guys, though. Beasts of cards, going to be in the data center. Going to be super interesting to see if anybody gets their hands on them for outside testing from that perspective. Let's talk about Discord. It's turned into an info stealing backdoor by this new malware that's been reported on Bleeping Computer. This is very important for the cryptocurrency community because you need to be paying attention to what's going on in Discord. A lot of cases, I'm sure if you're in Discord and you're in any cryptocurrency focused Discord channel, that you've gotten some sort of spam from people. Be careful not to click anything in this spam, because what you'll notice is that typically it's something like OpenSea.fo or something along those lines, where they just change maybe the domain there just a tad to where you don't recognize it right away. You click it and then it basically runs some sort of malware on your system. One of these, of course, is a new malware that is targeting Discord users by modifying the Windows Discord client so it is transformed into a backdoor and an information stealing Trojan. The Windows Discord client is an Electron application, which means that almost all of its functionality is derived from HTML, CSS, and JavaScript. This allows malware to modify its core files so that the client executes malicious behavior on startup. Discovered by researcher Malware Hunter team earlier this month, this malware is called SpideyBot, based on the name of the Discord command and control channel that the malware communicated with. A comment in the article below, though, claims its real name is Blueface. When installed, the malware will add its own malicious JavaScript to your app data Discord folder in the modules, and it gives you the full path here to go check for yourself. And this would be a readout in Notepad of what it ends up writing into that file. The malware will then terminate and restart the Discord app in order for the new JavaScript changes to be executed. Once started, the JavaScript will execute various Discord API commands and JavaScript functions to collect a variety of information about the user that is then sent via a Discord webhook to the attacker. The information here that is collected includes Discord user tokens, victim time zone, screen resolution, victim's local IP address, victim's public IP address via WebRTC, user information such as username, email address, phone number, and more, whether they have stored payment information, zoom factor, browser user agent, Discord version, and the first 50 characters of the victim's Windows clipboard. So if you're Control-C'ing those seed phrases, well, good luck, my good sir, because you shouldn't be Control-C'ing those, because obviously this would happen. Now, there are applications that you can install that will clear your clipboard. I highly recommend them. Some are built into antivirus or password manager options, and that's going to be really, really good because it'll just basically on a cycle clear your clipboard. I would highly recommend that. Even if you don't use Discord, anything else, clearing that clipboard can be very, very important, especially if you're copying and pasting passwords from like a password generator, hence why a lot of password generators will have this automatically built into the suite where it will just automatically clear it. It's very important to keep that on your system at all times, especially with your copying seed phrases and so on. At this time, the above site is down, but is known if, is not known if the different sample utilizes a different site or not. Furthermore, one commenter below states that the malware has been discontinued, but we have no way of confirming that. Researcher and reverse engineer Vitaly Kremez, there we go, who also analyzed the malware, told Bleeping Computer that the infection has been seen using file names such as bluefacerewardclaimer.exe and synapsex.exe. While it's not 100% sure how it's being spread, Kremez feels that the attacker is using Discord messaging to spread the malware. As this infection shows no outward indication that it has been compromised, the user will have no idea they are infected unless they perform a network sniffing and see the unusual API and webhook calls. If the installer is detected and removed, the modified Discord files will still remain infected and continue to be executed each time you start the client. The only way to clean the infection will be to uninstall the Discord app and reinstall it so that the modified files are removed. Even worse, after over 2 weeks, this Discord malware still only has 24 of 65 detections on virus total. Checking if your Discord client has been modified is very easy, as the targeted files normally have only one line of code in them. So you can check your app data format. It should only have one line of code, which is this module exports equals. This is correct. And you need to check it in both of these locations, which is going to be your Discord modules and then the Discord desktop core. Make sure both of them only have it. Links down in the description so you guys can check for the malware yourself. Be very careful out there, guys. And like I said, there's other things you can do to prevent this, like, for example, not copying and pasting your seed phrases, making sure that you have a clipboard clearer application of some sort, and don't click suspicious links within Discord private messages or even within Discord channels. That's going to be pretty much it. I just want to make sure that everybody stays protected, because at this point we have spam and bots and scammers all over the place, especially within cryptocurrency. Let's go ahead and talk about U.S. Senate to consider bill examining El Salvador's Bitcoin experiment. The bill, which was passed out of committee on Wednesday, generated the displeasure of El Salvador's President Nayib Bukele. The full U.S. Senate will vote on a bill looking to mitigate risks to the U.S. financial system from El Salvador's adoption of Bitcoin as legal tender. After the bill was passed out of committee on Wednesday, the Accountability for Cryptocurrency in El Salvador, ACES Act, was introduced by Senator James Risch, Republican of Idaho. keep these names, guys, because these are the people we don't want, right? Bob Mendez, Democrat, New Jersey, and Bill Cassidy, Republican. I actually am stupid. Is that Louisiana? On February 16th. Quote, as El Salvador has adopted Bitcoin as legal tender, it's important we understand and mitigate potential risks to the U.S. financial system, end quote. Risch said in a statement on Wednesday, adding that legislation would require the state and treasury departments, among other federal agencies, to mitigate risks such as potential empowerment of China and organized criminal organizations. You know how they're really enabling this? Like, if we want to be completely honest about what's going on, the real problem here is the sanctions, which has proven that U.S. will basically manipulate the U.S. dollar to control other countries, and it's putting other countries off. This is why you are now seeing Russia charging the UK in rubles, and then, of course, the potential for Saudi Arabia to start accepting the Chinese currency yuan for oil over there. These are the two big impactful things to the US dollar, but, you know, they got to set up some other enemy, and it looks like it's going to be cryptocurrency. The bill would also ask the U.S. to monitor remittance from El Salvador. El Salvador's president, Nayib Bukele, expressed discontent after the bill received a committee passage. Quote, never in my wildest dreams would I have thought that the U.S. government would be afraid of what we are doing here, end quote. Now, I, quote, retweeted that and said naive because, frankly, I think it's naive to think that. Here's the original tweet that you can take a look at from Mr. Naib here, and he does have the link to the specific bill, which I highly recommend going through and reading. But suffice to say, it is essentially just a way to basically strong arm, I guess, El Salvador into utilizing the US dollar more. El Salvador adopted Bitcoin as a legal tender last fall, launching a government-backed wallet and offering incentives for Bitcoin usage. Bukele also announced the country would raise $1 billion through a Bitcoin-backed bond issuance, though this was delayed from its initial planned launch of mid-March. And that's because, obviously, there's some issues going on with everything in the pricing there. We need to be paying attention to who are creating these bills and make sure that if we are actually following the fundamentals of cryptocurrency and basically any sort of promotions for cryptocurrency or where we want to see it move, whether that's going to be towards decentralization or towards centralization, and we need to vote accordingly. Now, I know a lot of people are down and defeatist about voting and so on, but I'm just going to tell you right now that we're going to talk about these people. We're going to bring them up when they make decisions like this, and then hopefully if you live in that state, you can vote accordingly for that. I'm an issue voter, and my issue is cryptocurrency, so I don't care to discuss any other straw man arguments about other potential policies because that is not what this channel is about. Let's get into the fun one today. What is the state of cryptocurrency mining today? Bitcoin and Ethereum mining, what the data shows. We have a nice slideshow here as part of the mining week from CoinDesk. So this is going to be chatting about what's been going on. The past year has been a roller coaster for two of the largest, most influential blockchain, Bitcoin and Ethereum. Bitcoin mining underwent a seismic shift in late spring as of 2021 as China forced miners to shut down. The following migration of hash rate has changed in the landscape of Bitcoin mining indelibly. All right. Ethereum, for its part, is the process of transitioning away from proof of work mining altogether as it prepares for the merge. Sometime in mid-2022, it will switch to a new proof of stake validation process. The effects of this impending change are already being felt by Ethereum miners, especially since the London hard fork of August 2021, which brought in a new fee mechanism. What follows is a snapshot album of the state of Bitcoin and Ethereum mining at this pivotal time for both blockchains. Hash rate fell dramatically in the late spring of 2021 due to regulation enforcement measures that set off an east to west migration from China to the rest of the world. In October of 2021, the Cambridge Center for Alternative Finance published data that showed definitively how China's share of global hash rate had fallen to almost zero by July. Cambridge's data supported the notion that China is no longer the dominant geographic player in hash rate. Meanwhile, the United States, Russia, and Kazakhstan experienced growth in hash rate in 2021. As a result, Bitcoin's hash rate has become less concentrated geographically. And you can see here, basically, I think this was 2019, and you can see total hash rate 4% in the US. Over here in China, 78% or 76%, something along those lines. Russia at 6%. And then you had Kazakhstan at 1%, Iran at 2%. Now, a lot of people have always complained about China and the hash rate issues over there and them having over 50% of the hash rate, primarily because the manufacturing of all the miners were in China and still are to this day in China, but now they're getting shipped out globally. You can see this in the chart over here on 2021, where Kazakhstan has 18% of the total hash power now, most of that coming directly from China, and that's going to be dropping here as, of course, all of their regulations are put into place because of their lack of power supply, essentially across the whole country, and the power issues they're having. Russia's up to 11%. And then if we bump on over, we can see that a lot of other people are rising as well. Iran's up from 2% to 3%. Malaysia's up from 3% to 5%. Ireland's up to 5% from 0%. And Germany's up to 4% from 1%. Canada from 1% to 10%, and now the United States up from 4% to a whopping 35% as the hash rate starts to move all the way over to the US and stateside. Now, Canada is also having some more issues, so between Kazakhstan and Canada, it might start to go ahead and consolidate within the US as well. This map is very interesting, especially if we start considering all of the other stuff that's going on in geopolitics, but we'll continue on here. So the evolution of country hash rate. Governments across the world started taking crypto seriously in 2021. China banned it outright in Q2. India and Nigeria tried to do the same. While some governments were considering bans, states in the US like Texas and Kentucky embraced Bitcoin mining, providing incentives to bolster energy grids and revitalize local economies. If we follow the flow of hash rate, we can see that the US's share of hash rate started increasing as early as October of 2020. The US is now the world leader in hash rate, followed closely by Kazakhstan, not really closely, and getting worse, by the way, whose cheap energy source and proximity to China have outmuscled most mining bans implemented by the government there thus far. There's some more charts there, and then of course you can see the growth of the United States hash rate overall. Either way, what we are seeing is more decentralization across nations for the mining hash power, and I don't necessarily think that's a negative thing. So, miners typically participate in mining pools in order to smooth out income. The bar chart at the right shows the Bitcoin hash rate of the top mining pools. Foundry Digital leads all mining pools. The distribution of hash rate follows the distribution of blocks found by design. As you can see, we have Foundry Digital, Ant Pool, F2 Pool, Poolin, Binance via BTC, BTC.com/pool, and then SBI Crypto Pool. And Luxor really coming in lately, kind of growing a lot, to be honest with you. Following China's crackdown on Bitcoin mining in Q2 hash rate, the amount of computational blah, 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 blah dipped precipitously. We already know what hash rate is. So since then, Bitcoin's hash rate has recovered, with pool reported hash rate hitting a point in time, all-time highs of 189 exahash per second on the last day of 2021. Data suggests that Bitcoin miners successfully relocated their security infrastructure, all while experiencing no downtime. As of March 18, 2022, hash rate is hovering near its one-day all-time high of around 213 exahash a second. As its name suggests, network difficulty is a measure of how difficult it is to mine a block. The Bitcoin mining algorithm constantly readjusts how hard the mining process is in line with how many miners are operating in the network to ensure that blocks are discovered at a steady pace. This adjustment occurs at the end of each difficulty period, which spans 2,016 mined blocks, roughly 2 weeks. Difficulty is a lagging indicator for hash rate. More hash rate would lead to higher difficulty. Hash rate typically chases changes in price, so it is notable that difficulty has increased in 2022, even as Bitcoin's price tends to trend down. This is kind of bucking the typical trend of hash rate following price, because we still have hash rate increasing, is essentially what they're trying to say there, which definitely, I think, is like a bullish signal, or at least a signal that tells us that the old super cycle is not necessarily indicative of what's happening right now, because traditionally what we would see around this time, especially with the recent dips and so on, would be a decrease in hash rate across the network, which is not happening. And you would think it would be even more obvious this time around because of the ban of mining within China. Thermocap is the cumulative sum of all mining income in fiat denominated terms. Since miners secure the network, Thermocap can stand in as the amount of miners are compensated to secure the Bitcoin blockchain. Thermocap represents the total accumulated value generated by Bitcoin miners, similar to how GDP represents the output of a country produces. If we then divide Bitcoin market capitalization by Thermocap, we get the Thermocap ratio. Historically, a high Thermocap ratio has signaled that Bitcoin is near the top of a market cycle, and a low Thermocap ratio has signaled that Bitcoin is near the bottom of the market cycle. The Thermocap ratio spiked in March and October of 2021 and has recently oscillated in a tight range near 20x, suggesting the market is in a unique position relative to historic performance. Like I said, I can't predict exactly what's going on, but what I can say is it does look like this is a unique case regarding just not only mining, but obviously the crypto markets, whereas we're not seeing the traditional super cycles happening here in any of these charts. So it's pretty incredible. As Bitcoin miners work to secure Bitcoin network, they are awarded block subsidies along with any transaction fees that users pay. When they send Bitcoin transactions, block subsidies represent the Coinbase transaction, which mints new Bitcoin to the miner that finds the valid block. The block subsidy is currently 6.25 Bitcoin. This plus the transaction fees are referred to as block rewards or miner revenue. Miner revenue is an important metric because transaction fee rates, the variable component of miner revenue, respond to changes in demand for block space on the blockchain. Low fees mean indicative of falling demand for using Bitcoin, while higher fees can indicate a rising demand. And then you can see the USD revenue compared to the Bitcoin revenue, and kind of where they sit at, where the Bitcoin revenue is a little bit over the US revenue. Kind of interesting. Largest mining entities by block. Miners typically participate in mining pools in order to earn relatively steady, predictable income. Mining pools allow many different miners to contribute to generating a block. Any rewards earned by the pool are then split among them according to the individual processing contribution. Although more than 50% of the hash rate can be controlled by just 3 entities in Ethereum and 4 entities in Bitcoin, there are substantially more smaller other mining pools in Ethereum than there are in Bitcoin. The visuals below demonstrate who is enabling the most amount of mining power to secure Bitcoin and Ethereum. And so you can see over here we have the distribution of Bitcoin blocks mined in the past 1,000 blocks. You have Foundry Digital mining 22% of them, F2 pool at 13%, Ant pool at 12%, Poolin at 10%, Binance at another 10%, and via BTC at about 10%. And then it kind of starts dropping off down from there. This is important to pay attention to because you are really giving these pools a lot of power and a lot of income. So if they're not doing what you want them to do, as an individual miner, you do have the power to shift that hash rate, okay? And it does affect them pretty heavily, okay? And that's going to be important to keep in mind. On the Ethereum side, which is really important for this channel, Ethereum or Ethermine is at 31.33%. We have F2 pool at 13%, which is actually quite a big dip from what it used to be because of, you know, the China stuff, the China bans. Hivon pool at a whopping 10.84%, Flex pool at almost 6%, 2 miners at 4%, and then it kind of keeps dropping off from there. Ethereum miner revenue. Before EIP 1559 upgrade in August of 2021, Ethereum miners were rewarded with 100% of the transaction fees. Oh, we know that, baby. Don't we know that? We know that all too well. Oh, we ran out. We couldn't. Our recording stopped. We have no sufficient data or space. Give me 1 second, boys, while I clean up some of this trash over here, so that we don't have any more issues. I need to move some more stuff to my NAS, apparently. So that's fine. Let's continue on here. So EIP 1559 created a fee system with a mandatory base payment per transaction. Let me make sure that we got the monitor up. Cool. All right. Per transaction that would be removed from circulation permanently. EIP 1559's effect on miner revenue has been a community concern leading up to the merge. The move to proof of stake to create a secure, more scalable smart contract network without the need for miners and significant energy consumption. While EIP 1559 wasn't directly responsible for the increase in market value of Ether, showing emissions helped take significant sell pressure off Ethereum's native asset. And so what you can see here is mining revenue is significantly more stable, is what they say here with EIP 1559. Now, that is a little disingenuous because, yes, we could say more stable, but why is it more stable? It's because they're always burning a portion of it, so it's going to keep it kind of the same. What is not more stable is the fees on the network, which we've been having an issue with and talking about for the longest time. This is why layer 2 solutions are kind of taking over Ethereum in general. Ethereum transaction fees versus block reward. As outlined previously, before EIP 1559 upgraded in August of 2021, Ethereum miners were rewarded with 100% of the transaction fees. EIP 1559 created a fee system with a mandatory base payment per transaction that would then be removed from the circulation permanently. While EIP 1559 wasn't directly responsible for the increase in market value of Ether, showing emissions helped take significant selling pressure off Ethereum's native asset, transaction fees as a percentage of the miner's revenue have also trended down, which has made the fee rate for Ethereum more predictable. I don't think the fee rate's more predictable. Okay, so Ethereum transaction fees as percentage of miner revenue. So this is Ethereum transaction fees as the percentage of miner revenue. What you would want to see is what the actual fees are. So I think we would need a different chart for this, in my humble opinion. They do say, watching the data, the introduction of Bitcoin in 2009 gave investors a new level of information transparency. Traditional assets allow investors to access the real-time market data, but the economic and financial data that underpin price performance are typically subject to monthly or quarterly updates. In contrast, Bitcoin and Ethereum and other blockchains allow for the real-time collection of metrics to inform investment strategies and decisions. And that's a good point. It is more transparent. So that's going to pretty much wrap up the state of mining, where we sit at it. What have we learned? Of course, we've seen crazy shifts from hash power being in China over to the US, which has now taken the lead. We see, of course, the changes in the pricing of Bitcoin compared to the hash rate, where typically what you would see is a hash rate level that follows the price of Bitcoin, which is why I think in traditionally people expect better prices on, or better return on investment for Bitcoin miners than we are seeing now. At this point, I think it's so ubiquitous, and the fact that like people are expecting Bitcoin and this mining to stick around for so long, that the ROI is getting pushed further and further out for Bitcoin mining machines. On the Ethereum side, what did we learn? Not much. I didn't actually from this learn a lot. On the Ethereum side, I was already aware of Ethermine pretty much controlling all of the hash rates since the ban in China kind of took out Spark Pool, which was the other large one. And it's not really surprising. We already have talked about EIP 1559 to death. What would have been more interesting, I guess, would be a chart of hash rate, but you guys know we cover that every day, and we're aware that we're sticking right around 1 petahash a second. A little bit of a drop due to the increase of profitability of altcoins, which let's go ahead and take a look at mining profitability for the day. And we are down to 0.068 ETH for the day. However, our hash rate is sticking around the same. Unfortunately, it does look like we are not finding as many blocks on 2 miners as we did yesterday, and that is, though, compensated by the price of Ethereum going up today. So we're at $208 today. If we take a look at my payouts, you can see that we got paid out 0.071 ETH yesterday. So we're down about 0.002 ETH from yesterday. We were a little bit more consistent there for the past 2 days since we've made the move to 2 miners for a majority of the farm. The rest of the mining power that is going on at the farm GPU wise is on flux right now. And except for, of course, one rig that's doing Caspa mining, and that one's not something we can really track. I'm doing that on a local node. Maybe I should try to build myself my own API, but look, I'm running a little low on time, so I have not built that API to track it. That being said, we are sticking around a 24 average of 413 solutions a second. Right now it's a little down. It's starting to warm up outside. Maybe something's going on there. What is that though translate? We're at 5.86 coins, a little bit below the 6 coins we made yesterday. But we had a price increase of flux as well, meaning that we are making $9.55 a day. And that's across 6 GPUs, 2 2080 Ti's, a 3080 Ti, a 3070 Ti, and 2 3060s. And that is currently what's on flux. If we take a look at all of the CPUs, we are mining Varus coin, and we have basically a 4770 here on that rig. We have a 3600 XT, a 5600 XT, a 5800X, and then on the fix, I believe that's going to be Threadripper. I need to rename that to SOT TR01. And then we have the test rig here, which is actually a 7700. So the 4770 has been on average outperforming the 7700. I think that's due to heat more than likely, and the higher core clocks don't necessarily mean as much on Varus coin. For 24 hours, we're getting about 1.5 Varus coin a day. So we could calculate that out, I guess, if we went to coin market cap or whatever and looked it up. I don't even go into the wallet. It's just so it's $1.32, about $2 a day, give or take, in revenue on the CPUs. So not great, not crazy, but let's check mining profitability for the RTX 3090. Calculate this out with the proper flux hash rate, and we see Ethereum at $4.09 a day, really pumping up here. I'm not seeing that translate as far as amount of Ethereum being mined, which is a little frustrating. It does look like I'm also a little bit down on 2 miners right now too. But Ethereum Classics really holding strong, $3.16 a day after power, which is less than, that's more than 75% of what you would make on Ethereum itself. So pretty impressive. We talked about that in depth yesterday. So if you're curious on what's happening with Ethereum Classic and all that, please check out yesterday's podcast. It'll be number 79. We also have Ergo at $3.10 a day, really pumping up. We saw a huge increase in price of Ergo. A lot of this has to do with the increase of price of Cardano, from my speculation as far as what's going on with Ergo and pricing. We still are, I think, I'm still a little lukewarm around Ergo from the emission standpoint. I have some worries there, but that tie-in with Cardano is going to help out a lot here. I think also, like Ethereum Classic, to be fair, has that tie-in too. Who helped with that? Charles Hoskinson. So, both of these coins, Ergo and Ethereum Classic, really their pumps are thanks to Cardano. Funny enough, if we really look at like what's been happening with the development, etc. And I think that's an interesting point. So I did swap the rest of my Cardano for Ergo, but that doesn't mean I'm down on Cardano by any means. And I think that's important to point out what's going on there. Sarah's at $2.78 a day after power, and Conflux at $2.73 a day after power. Flux has dropped down quite a bit. It's at $2.75 a day after power. But it is better to mine Flux directly than to rent your hash power out on NiceHash as of right now. So that's pretty good if we're looking at that. Okie doke. Let's look at mining, not mining pool profits. We want to look at mining pool stats and see if there's any huge shifts in hash rate across these networks as things change. Bitcoin has a huge increase in price, but still sitting at around 216 exahash a second compared to 2 days ago, which was 213. So it's increasing in the amount of hash rate. Let's go ahead and talk about Ethereum. We're back over 1 petahash a second. Yesterday we were down to 968 terahash a second. I think it's probably back up because all the people that were popping over to Ethereum Classic to try to capitalize on it popped over probably a little bit too quick. But let's take a look at Ethereum Classic and see. And you can see it kind of went up and then it started to kind of come down a little bit, but not a ton, not as much as I expected. It's at 28 terahash a second. And you can see a corresponding difficulty increase here as of today. So really that increase in difficulty really is hitting today. So we're going to see where this levels out probably over the weekend, and we'll know more on Monday. Let's take a look at Flux. And that is at 1.93 mega solutions a second. So a little bit of a dip in Flux hash rate as well, because yesterday it was at 2 mega solutions a second. Not as many spikes on the solo pools, just a couple. Last one was maybe, there's no times on this. So it was yesterday, but no time on yesterday. Then before that, there's one on the 22nd. And then maybe 2 days ago there. So not really any huge spikes recently, not near what it was doing for a while with those node announcements and so on. So a little bit different there. Let's take a look at Ergo, because Ergo was looking really good on the price charts. Is it seeing a corresponding hash rate increase? And it looks like the answer is no. It seems to be very unsteady. It seems to be that everybody is a little lukewarm like I am on Ergo, because usually when you see a price spike like that and what to mine pops it up in this top section here, you usually see a really quick corresponding increase in hash rate. This one's going to be one to keep an eye on, I think, because it does have potential to become more profitable than Ethereum. This one in Ethereum Classic, I think, especially when you consider one of the things that people need to take into account that I feel like keeps getting ignored when we have discussions of like what's viable after the merge for Ethereum. The most amount of hash rate that's really coming off of Ethereum from a GPU perspective is going to be those Polaris GPUs, the RX 480s, 580s, 470s, 570s. There's a ton of them. I mean, you're talking about the largest farms that we know of from like just YouTubers comes from like Bitsby Trippin', where a majority of those GPUs are just a ton of Polaris GPUs. So where do those go when we're done? Because it really will come down to the miner's decision, I think, at the end of the day, the large miner's decision for GPUs of what coin starts getting price discovery post-merge. And we could sit there and try to say, oh, it's Flux, oh, it's Ravencoin, but they have those two both have the same glaring issue of performing like crap on the GPU that is primarily deployed to mine Ethereum right now. So I don't think that price discovery is going to follow that. Sure, a lot of the Nvidia GPUs could go over there. It could have its own price discovery, and maybe we see a split. Maybe we see Ergo or Ethereum Classic really being more profitable on AMD GPUs, and we see Flux or Ravencoin being more profitable on Nvidia GPUs. That is a possibility, and technically, I think would work out for the best at the end of the day. I think that would be a better solution. But a lot of these farms that even have like a mix of like maybe some old Polaris started getting into RTX 3000 cards, they're just going to want to dump it on something that's at the same time. Like usually a lot of these GPU mining farms, the really large ones, the HUD 8, stuff like that, they're not going to want to go mine 50 million different coins because it's going to make it really, really difficult to liquidate and track and pay taxes and manage rigs because all the overclocks are going to be different. It's going to make it way more difficult for the large miners to do that. So if I take all of that into consideration, my feeling leans towards, of course, something like Ethereum Classic or Ergo at this time, unless, of course, there's some sort of shift in algorithm from some of the other competitors like Ravencoin or Flux. It doesn't mean that the projects are bad. It just means we need to look at it as objectively as possible to determine what we think is going to happen, because at the end of the day, Whatever the miners choose is what's going to start performing any sort of price discovery. And the other things that need to follow over, of course, is going to be developers. So what's the easiest place for developers to follow over if they want to participate in an ecosystem, well, where a majority of people are getting paid out? Because here's the deal, right? The reason why things like NFTs became so popular was not even necessarily because new people were bringing in new money from the outside initially. Initially, everything was being traded within the Ethereum ecosystem via the miners. The miners were the ones that were participating in DeFi and so on, right? So you saw very early things like CryptoKitties, for example. It was primarily like me and a whole bunch of other miners that were just playing around and purchasing CryptoKitties, right? So the devs may want to move over so that they get more participation. In fact, they'll get that initial boost of participation in whatever dApp they decide to move into. So what is the easiest ones to really do that in? Now, there is the argument for proof of stake, obviously just staying, and devs stay and everything works out fine and honky-dory and nobody moves. But there is this other factor that we need to take into account. The final thing to really take into account when we're discussing the merge is going to be usability for the end user, the retail investors, the people that don't mind, the people that aren't developing anything, right? And the fact of the matter is that MetaMask is pretty much ubiquitous across the board. So really, if we're talking about marketplaces and where to build them and how to integrate with the wallets and so on, I would say MetaMask is kind of like has to be used. I mean, it's already hard enough to teach people how to move the network, you know, go ahead and add in Binance Smart Chain or Ethereum Classic or whatever it may be into MetaMask or Polygon. Or there's a ton of chains. MetaMask does support a ton. My only point being is that supporting that's going to be important. Now, there is the argument that Ergo with Cardano and supporting the Yo ROI wallet and so on, there is that too. I'm just saying that the usability for the end user there is going to be important. An NFT marketplace that makes sense, NFTs that automatically add in that network to your MetaMask when you're connecting to it, which I think Ethereum Classic is doing. Not think, I know, because I minted one of their Classic Apes comic books just out of testing. We'll be talking about Ethereum Classic more because there has been a huge spike starting in December surrounding DeFi development and so on. So it's quite interesting. We already know, as I've discussed before too, that Ergo has a whole bunch of that going on as well. A lot more than a lot of other proof of work projects. There is, of course, the layer one attraction of Ravencoin for NFTs, but we kind of already talked about some of the problems I see with that. Primarily, that's going to be from the mining side of things with Ravencoin and Flux. Let's get into ASIC miners here real quick. And we have the Goldshell KD6 at $116 a day. We are not seeing a huge improvement in mining profitability on the ASIC front. In fact, we're seeing kind of a dip back down or just holding steady. This is really interesting because the moving up to the merge, I think a lot of people were expecting, you know, the ASICs to really start taking over and the GPUs to start falling behind. I think a lot of people didn't expect this price discovery to start happening on GPU mineable coins, and that seems to be the case. So we'll keep monitoring it, of course. We look at this stuff every day. It's just some things that I'm noticing. We have the KD5 in second still, if we ignore, of course, the Ethereum hash rate or the ETH hash ASICs. We have the L7 in third place on Verge, which is really interesting, and I haven't figured out why this has happened yet. So if you want to tweet at me or email me why Verge is all of a sudden popping, I would be happy to know. We have the Goldshell KD2 in fourth place, the Z15 in fifth place. We are seeing a huge profitability spike in Zcash lately, which has been interesting too. Finally, we have the S19 Pro, which we like to look at every day. That's at $17 a day on Digibyte, or $14 a day on Bitcoin. And then you can decide what you want to mine as far as all that goes. Let's go ahead and get into questions and answers. As always, super chats are never required, always appreciated, help keeps the light on, that sort of thing. Memberships are highly appreciated as well, but it is a monthly charge if you're looking to cancel that after you get into Rocket Chat and so on. let me know. There's plenty of guides on YouTube to go ahead and cancel memberships. I just want to make sure that people are aware of that. I think most of y'all figured out we are down about 50% in memberships across the board. So that's fine. It doesn't bother me that much, other than just like knowing that you can buy it, get into Rocket Chat, do all that stuff, and then get out if you need. And just, I understand that, like, also we're cutting back on a lot of different things, you know, cutting out different streaming services that we don't need to pay for anymore. All that sort of stuff as gas prices rise and inflation goes through the roof. And apparently, though, it's fact-checked and not true that we're going to hit hyperinflation, even though I have doubts that the fact checkers are checking properly. Personally, let's get into questions and answers. I'm going to pop this out. Oh, there we go. My goal with this show is I'd love to have over 500 concurrent viewers by the end of the year. That would be cool. All right. Let's see. Andreas11G says, at Son of a Tech, Ergo pumping because of 2 listings incoming, but of course ADA helps a bit as well. Yes, the listings are always helpful too, for sure. Detroit Irish says, at Son of a Tech, USDT and USDC or other stablecoin. I have no preference on stablecoins personally. I don't know which one would be better either. That's kind of, I feel like that's a super hard question to answer. Whichever one stays the most stable. Pay Me in Crypto says, at Son of a Tech, I'd love to see you interview an Ethereum Classic developer. I'd like to know if they're able to handle the potential network growth after ETH 2.0. That'd be interesting. I could see if we could get some. If there are any Ethereum Classic developers that do watch the channel, you can always email me at inquiry@sonofatech.com. I'm happy to have you on. Roach says, at Son of a Tech, how's the farm going stable? It's going stable. How is it going stable? Those fans. Those fans are working perfectly. We're sticking like throughout the heat of the day and everything. We're staying over 5 gigahash. Everything's been good. Daniel Reed says, at Son of a Tech, gas versus everything. Yeah. Raphael says, at Son of a Tech, what's your opinion on that 18th of March article of Time Magazine that Vitalik said about his hopes of what ETH 2.0 will turn about? Do you mean as far as like, I didn't read the whole thing, I'll be honest. I read snippets and I probably need to do more research, and I don't know exactly what you're referencing. I do know that he has disappointments in things being utilized for NFTs like Bored Apes. I think he has an argument as far as that goes, so I kind of agree with him there. But moving on, Impala says, at Son of a Tech, I have 800 to spend on a GPU. Which one would you go for? That's a good question. I think right now you want to stick around with AMD GPU, Nvidia GPUs, just primarily due to the fact that it has the most algorithms that you'll be able to mine post ETH merge. That being said, some of the older ones are really great, like 2080 Ti's, if you can find them at a good price, right? They'll do 60 mega hash on ETH for now, but then also they just absolutely destroy Flux as well. So they have really good options. Golden Wolf saying good morning from Seattle again. Always good to see you in chat. Anonymous Miner said, at Son of a Tech, did you see Doge being added to crypto ATMs? I didn't see any more getting added to crypto ATMs. I think the one that I have already had Doge on it in our town, closest town, but I don't know. RPN Chilled says, at Son of a Tech, any plans to pick up a helium miner? We already have one. It's not doing good. L Dude says, at Son of a Tech, have you considered any other investments such as gold? Is it worth keeping money in the bank account to invest to fight inflation? My goal right now is to move. So there's kind of like this progression I look at where it's like, how much do I really need to invest in different things? What do I want to invest in? If I want to invest in really anything, I want to do real estate now at this point. I don't really know how to get into it. And I know that I kind of want to start with cash investment, that sort of thing, just buying small properties with nothing on them, that sort of stuff. But to really get there, it's hard right now. Like, you guys already know what's going on in the mining, and I got to keep upgrading all the mining equipment. And part of that is doing all of the ASICs, right? So it's kind of where I'm at. Just needing to upgrade more on the mining front before I can really move into any other alternate investments. I wouldn't purchase gold. What am I going to do with gold in the apocalypse? I don't know. At least like property, I have some place to go. Go hunting or whatever. Gold's like, what am I going to do? Carry around gold bricks? Like, I just don't, I don't know. I think gold makes sense from like if economies are doing really well, I guess. Fried Electronics says, that's not a tech. How to use the display unpaid balance function in the new version of Gminer? I haven't tried it yet. Sorry. Mo says, that's not a tech. What specific changes Ravencoin can implement to take over after ETH? For Ravencoin, their primary thing is going to have to be being, in my opinion, they have to get Polaris GPU friendly. RX 580 friendly. It doesn't even have to like blow the socks off of everything else, but it's got to compete with the 1660 Super. Like, it just has to compete with the 1660 Super. It would be my best assumption there. Road says, look into swamp coolers. I have before. I think we're good right now, though. Seb's Chaps with the 279, a Canadian. Thank you, good sir. And then $50 coming in with a big donation. Thank you, Steel Automated, for the $50. Says for gas money. That won't even fill up the truck. I'm not going to lie. But that is half a tank. And that's all we need. That's all we need, baby. That's all. All right. George says, that's on the tech. Wasn't ETH forked after a hack? And that's how Ethereum Classic was born. Stolen money is still in Ethereum Classic wallets or something like that. We've covered this a lot. That's the big DAO hack. Basically, not real. I don't know if you would call it a hack or a manipulation of the code, a vulnerability maybe. All you really need to know about that fork, I guess, is that the idea was code is law. So if the code messed up, you weren't supposed to necessarily break it off. That's the argument between like Ethereum Classic people and then Ethereum. Ethereum basically rewrote all those blocks, which basically proved that the Ethereum devs could do whatever they want, whenever they want, to change the monetary policy, etc., which basically kind of, at the time at least, hurt Ethereum in general, because you are basically manipulating manipulating the money just like fiat would, right? Ethereum Classic left it in there, of course, and that was part of the argument. Now Ethereum Classic obviously fixed that issue, but a lot of what it was trying to do there was adhere to fundamentals that they had set forth early on in the project, with the famous term code is law. Andre says, ask Tech, which GPUs are your favorite to mining, Nvidia or AMD? I already covered this. It's the 1660 Supers, because they just like a rock. They're like the Chevys. They just keep going, bro. Andrew Wade said, ask Tech, why are you going into ASICs? Why not stick with just GPUs? Because you need to be diversified as much as possible. That's just really it. Detroit Irish says, ask Tech, ETH up to 3,122. Pumping it up. ETH 3,122. Boom. I think we're about to see a little bit of a bull run, maybe. I'm not a trading channel. I'm sure the trading channels are like going through the roller coaster. In my head, I go through the roller coaster too, and then I talk about it sometimes, but like, whew. Now, I'm taking all of my mining and putting it into Ethereum Classic up to the merge, because I'm just wondering what's going to happen. We have 10 euros from James PT, says Netflix money. Netflix is one I'm definitely going to cancel. I'm kind of, they increased the price, I think, to like $19 a month. Other than the Ryan Reynolds movies, there's just not much on there. And then I guess The Witcher and some stuff. I don't watch it a lot, to be honest with you guys. I feel like I'm way behind. I would rather sit down and play a video game, personally. But I think it's either going to be like, we got to get rid of a couple of them. Probably going to be like Netflix or something. Amazon, you kind of always get no matter what, because we pay for the Prime membership thing. So I guess that's kind of up in the air. Disney, get rid of Disney. That's an easy no. I don't know. stuff like that. FE says, you look pumped, spend much time at the gym. Yes, I work out a lot. I already worked out this morning too, and then I'm going to jujitsu here in just a little bit as well. So I try to stay in the gym as much as possible. I've been having some back pain in the morning, which is really killing me. So like this morning wasn't really a workout. It was like stretching a lot, trying to really, and like a lot more support stuff. The jiu-jitsu will really start doing a number on your back, especially. My hips are replaced from racing motocross. So it's, I think, quite a bit harder for me in some cases there. Andrew Wade says, that's son of a tech, so you don't feel like you can be diverse enough with GPUs. No, I think that you should split it up. Plus, I mean, here's the other thing. Just to be like straight up with you guys too. My job is not just running a mining farm, right? That's why I have a 6500 XT sitting back here that we tested. That's why I have a 3070 Ti. That's why I have these GPUs that would make no sense in any terms to ever purchase whatsoever, because my job is not just running a mining farm. My job is also doing research and development, or research for the channel, to provide you guys with as much information as possible. My job is not just the mining farm. My job is this YouTube channel as well, and providing you guys with as much information as I possibly can. Part of that is, of course, getting into ASIC mining. Now, of course, there is the FPGAs, as Andreas brought up as well. I've been kind of off on that because the pricing's really high. It's the same with the ASICs. Pricing's really high, but these are things that I have to research. So these are the things that I do. It gives me a better perspective on the industry as a whole. It's also why I'm trying to develop my own coin. It's also why I'll try to probably do a token on the Ethereum blockchain. It's also why I'm researching Solidity. This is all just part of it, right? I'm not going to be the YouTuber that just talks to you guys about prices and be like, oh, with no background knowledge of like what's going on with the code or what's going on with each individual miner and all that. Like, I want to make sure that I have the most information that I can provide. And so that's part of the deal there, right? Some Goblin Loser, thanks for the $2 says money, not much, but here are my 2 sats. Thank you for the 2 sats. Snarks Domain says, at Son of a Tech, the 3080 FE putty job went really good. Made a video. Cool, dude. Max Barbell says, at Son of a Tech, reverse hypers for back pain. I do a lot of different, I don't know about reverse hypers. I'd have to think about it, but I don't know if that's the one where you go like that. I do a lot of like kettlebell work primarily. And then been working on the core a lot lately to get some of those smaller muscles working. Wolves Boosted Channel says, at Son of a Tech, has anyone asked you about Jewel from DeFi Kingdoms? No. And the launch of Crystal Vale? No. Jamie Smith says, at Son of a Tech, go get a few spinal decompression treatments. They are life-changing. I usually do hang like from my pull-up bar for the decompression. I don't know. Maybe I'm just too old school. Sounds like that would cost money. All right. I think that's going to wrap it up for today. Thanks, everybody, for hanging out. Thanks for the 300 concurrent viewers today, too. Make sure you guys don't forget to hit the like button, because there are 300 of you in here. Let's try to see if we can even get to 200 likes. We're at 118 right now. That'd be awesome. Don't give any more chat revenue, because we were at $69 for chat revenue for today. I was going to be like, let's leave it there. But we're up thanks to Ted Park's Canadian donation of $10. So thank you there, sir. Thank you. We didn't hit that 69 goal, and I think it'd take too long to get to 420. I'm going to get all sorted for the day. Thursdays are my busy day. Basically, I end up driving most of the day to get my daughter. Then we got baseball and all that sort of stuff. So we'll probably only have clips on the channel today. I do have a video talking about Ethereum Classic that I'm working on. Hopefully that'll come out this weekend. And then we have like a ton of reviews that I just got to get into. It just is what it is. But we'll catch you guys next Tuesday.